Hello guys, glad to have you on board again. Today we're going to cover up some intraday trades, but just to set things really clear about the cryptos, we've got nothing new to talk about. So I would like to say something, but just talking for no reason would be just a waste of both yours and my time. So let's move on to things we can actually talk about. We're going to talk about this stock market, but first we're going to do a first quick swing introduction, talking about AUDNZD, who is giving early signs. So we've got the ARBA talking overnight, and apparently the market kind of likes that. I don't even know what's been said. All I can see is that I can see AUDUSD heading toward resistances, which is a good sign. I also see NZD/USD heading toward those same resistances, but I would pretty much like to see a difference between those two, like seeing the NZD rejecting those resistance, where I would like to see AUD breaking through them, which means it will finally trigger what I was expecting, which means we would have AUD reacting positively out of this weekly support area, where, and it shouldn't be acting like that. In the same time, we've got NZD working around the resistant context in a weekly scenario. So obviously we could have an intermediate scenario in which dollar is just as weak as possible and increasing weaknesses, which means we could have both AUDUSD and NZD/USD breaking the resistance. But anyway, we should have a stronger breakup in the AUD than we could have in the NZD, for the reason that NZD is trading into resistance area. So we'll have it will hardly find some positive, some gas to buy, which means having a choice to buy either AUDNZD, I think investors will most likely get themselves into AUD instead of NZD, simply because you rather like to buy a support than buying a resistance. Simple as that. So I still stand to believe that what's been said is that many people are doubting regarding the AUDNZD, saying it's just bearish, Phil, get the hell out of here. I'll just say, I don't give a shit. I mean, I have a scenario. As long as I haven't been proven wrong, I will just stand for what I said. I think I'm just going to be right. It was just a goddamn matter of time. It took way too long, and way longer than ever expected to be. To get that scenario to trigger. I never anticipate that we'll ever break through this trend line, which is this one. I never thought we would be able to. I thought this would be some kind of trap, which means I've been fighting against the market going down. I still tend to believe that this, in the long run, still remains being irrelevant. I tend to believe that the market here is exhausting, but I will definitely release my trades if we were to go below that level. We shouldn't be going there, and if we do, I mean, I'll get out, waiting for further informations, but still it hasn't. I still tend to believe we will just have gone as crazy fucking far as we could go, which means invalidation is there. We'll just basically have gone 0.5% on top of this, but still, going 0.5% from my stop loss, is that a big deal? I don't think. I mean, trading is not about entering perfectly at the perfect price and have the exact swing of the market like you bought the bottom. It's not the goddamn about that. Trading is just about managing the risk, making sure that the profit taking will be filled and not the stop loss, and that in between those two you manage the risk not to risk more than you could gain. It's simple as that. I'm definitely risking quite a lot in here as well. These are the big scenarios I have. But just like the EURJPY, if it goes right, who gives a shit if we got close to my stop loss? All I care about is not to be taken down. And if I haven't done a perfect job catching the market top or the market bottom when I'm selling or when I'm buying, who cares? I mean, all that matters is how much risk did you take to get to the profit, and how much the profit was regarding the risk you taken back then. So all I care is for the price to validate at some point. When they will, I'll put more money in, which means I'll increase my gain. I will obviously like to have the perfect price, like catching the bottom or catching the top when I'm selling. Things tend to say the best scenarios are the one I struggle the most on to, which means all I care is the actual release, the end of the scenario, the end of the story. the beginning of the story can be kind of a jitter and sideways action tending to get close to my invalidation. It doesn't mean I like to struggle. I don't like that. I very well like when things just do well without having to manage those things. But history has proven that those scenarios, when the market is fighting with you on those scenarios, just has always been the most rewarding ones in my account. So I have that kind of, it's just like a game. I mean, it's a risk management game. If I take too much risk, the market takes me down, and it's just normal. All right, that's what we call risk management. Anytime you put yourself down the corner, generally the market will just put you down. So all you got to make sure is that you don't give it the opportunity to take you down. And by doing this, you have to risk manage. It's been freaking hard with the AUDNZD to risk manage because the market hasn't left me much room to work with my risk management. But still, I'm still alive. I still have decent risk management in here. Yes, I might be down the corner, which means I won't be able to risk manage again. If we go lower, I'll have to get the hell out. But still, if it works fine. I mean, my average prices are there. It's not that bad. Remember, I've been starting trading that shit up here. So good risk management is this. Even if starting in there was crazy hell of a mistake, when you see what's been coming afterwards, you would just say, oh, Phil is stupid. He started buying in here. Why didn't you just wait for this? You know how easy this is to talk about something already happened. You would say, back then it wasn't even making sense to buy. It was making sense to buy, but in shorter time frames. I never imagined that we would pull back to the weekly time to the weekly areas. We did, which means first of all I've been trading 1 hour charts, and then 4 hour signal, and then dailies, and finally weeklies. But still, here we are today. If the scenario validates, it's all I care about. I've been taking some risk taking. Definitely I'm risking 10% on that scenario, but look at the gain. I mean, the potential gain worth the shot. This is why I'm still in. Even though it's as long as I could ever imagine. I mean, to me, breaking this trend line should never have lasted more than a couple weeks. And we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, and 18 weeks below this goddamn trend line, which means, oh, you can be sure that the breakup is going to be brutal if we do reverse that shit. I mean, if we get back into the triangle, which is not a triangle to me once again. To me, it really is a diamond, but a diamond that's been lasting way fucking too long. Oh, sorry about that. Just my phone falling off a cliff. So the thing is that if we're about to trigger that kind of trend, which I tend to believe is definitely what's going to happen, then what we're trading right now could be just that or that. I mean, the early signal before trending. So as back then, you would have started selling in here, even if prices would have gone there, would you have been considering this invalidate? All right. I mean, just thinking about this, I'm going to explain you why I say that. I mean, you never know. The thing is that the more you're trying to catch up on market, the more you're going to be proven wrong. Understanding what's going on, you don't know. What you do is fucking risk manage. So now let's put it in perspective, because I just received a message from the French guy. Basically, the guy says, oh, thank you, Phil, because anytime you say something, the market just does the opposite. So I'm basically making money trading the opposite side of your scenarios. So that's just as stupid as it could be, because it's just a matter of time frames. And we're going to get to the intraday trades right after, no worries. I'm just explaining this because it's a very key element to understand into trading. Because I teach you guys not to analyze things as being black or white, right or wrong. It's all about shaded grays and how to assess the risk you're taking for the potential gain. So now let's put it in perspective using a chart, all right? Saying, if I got to take a trade in here, is this a bad trade? All right, let's do it in a dumb perspective. All right, let's consider I'm taking a short entry right in here, following the strategy. But let's say in here would be a daily chart signal, because we're trading at the trend channel in here. So let's say I take a daily entry in here in a weekly scenario. So I know it's going to be aggressive. All I know is that regarding the aggressivity of that trade, I have to put a stop loss further away. All right, which means I know that the stop loss must probably be set at the historical highs. All right, so I know I need to take all of this in accountance in my risk management. Therefore, when I'm taking that trade, I'm going to take a tiny position sizing just to be ready to be proven wrong in short run. All right, which means I know I'm selling in a weekly context, so I know this trade, when it will trigger, will give me probably getting to those targets. All right, so taking that trade, I probably would have targeted this. Let's put the prices back in context. All right, let's fuck that, because analyzing something that you know what's been when you know what's been happening afterwards is way too easy. All right, said, let's put ourselves back in that context and do it even more than that. We're going to reverse the scale. So you're going to have a clearer perspective. So when you have something like that, what do? Yes, you buy in here, but you know that you're going to have a large stop loss because prices may be just trying to trigger the stop losses below that level. So putting a stop loss in here doesn't make sense. So what you do instead, you're going to say, okay, I need to take all this price area as a risk management, but I'll definitely going to buy in here. So it will be a buying entry in that context. But I would say trend channel, if I do have a signal in the daily context, I'll buy it to try for a breakup. All right, that will be exactly, remember what I teach you about these things. We're going to have high lows, and prices have been rejecting out of the trend channel, pulling back into the context channel. So in here, you definitely have to think that if prices manage their way up in here again, normally it's going to be a breakup. That's what I would have traded. So I would say I'm speculating in here on the daily chart that the market will support this price. If it doesn't, I need to accept price to go there, and I will probably buy again in this area. All right, as simple as that. But the first position, is it wrong to keep it? Some people will say, if it breaks down, just get the hell out, and you'll buy again in here. Now, what if the prices just does that? And it can happen so freaking shit ton of time. So you never know. The more you're trying to control things, the less you'll be efficient in trading. What you need to understand is just to have a decent perception of the risk and accept to be proven wrong before being proven right. Just make sure that it's worth the risk. If this is the risk you want to take, then your profit taking must be at least there. Because if you're risking this to profit taking there, it just makes no sense. You're risking as much as you would like to get. It's just worthless. Targeting this area kind of makes sense. It's not that best, but it's not that bad. Risking in here, definitely worth that stop loss, don't you think? This is what we call a trading strategy. This is what we call chaos management, because in here you don't know what the fuck is going to happen. You don't know if prices will go there to 131 or to 134. All you know is that buying in here makes sense. All right, sorry about that. So, is this position making sense? Okay, now we know what's been happening afterwards, so it definitely, you know that it's been working, it's been making sense. As you don't know if prices will reverse in here or not, all you care about is the price to fill your goddamn target afterwards, and as I said, not having taken too much risk in between. Okay, so don't be reacting like that. Please don't. I mean, it is not just to defend myself. I don't give a shit about justifying my behaviors. I know for myself. I mean, I stand for what I say because I know it works. It's just some people don't believe it, and I'm okay with that. All I can tell is that I'm trying to put you in the right direction. And as long as you see things like that, the saying, Phil's been buying in here, it makes no sense, because if prices had just done that, and they could very well have done it, all right? Some people would say buying in here was stupid because you could have bought here. I mean, this is not how trading works. Not even halfway of how it works. How it works is just you manage the goddamn risk. And the higher the risk, the larger the stop loss. Okay? The less you know about the probabilities, the less you put in the market. So you'll be able to readjust as the prices moves on. As going in here, you don't have a goddamn clue about what's going to happen. You have to put a large stop loss to account for the most probable scenarios. You know that probably in a mid-term to long run, you'll probably get to your targets, and you need to absorb the underlying risk in the speculative area. Otherwise, you just don't speculate and you wait for the goddamn breakup. But definitely, it isn't going to be as rewarding. The breakup in here occurred in there. So this is where the breakup occurred. So a breakout trader, definitely far less risk-taking, but look at the gains. He will buy in here, put a stop loss there, All right, let's put it in perspective. It will target probably the same area as I do, but it will buy in here. Okay, it's a buying entry, let's be honest. All right, it's a buying entry. Its stop loss will be set out of the previous lows, so in here. And to be secured, it will probably put it in here, not to avoid some pullbacks of cutting in here, is risking 1-to-1. So how much do you think this position will cost him? It will probably be very low leverage. So it means he's going to win pennies. That's what I told you. The breakout traders are way safer trading than I do. They take far less risk. Goddamn, they take far less gains as well. It's really as simple as that. The more risk you take, the more you need to be able to handle them and precisely assessing the shaded gray areas. But the more you do that, the best you do that, the more gains you'll take. It's freaking simple as that. That's the job I'm trying to teach you. Not to be right, wrong, not to catch the bottom and sell the top. It definitely isn't about that. Sometimes it will happen. People will think I'm a god. I don't give a shit. All I care is not to take too much risk for the potential reward I'm expecting to get. And obviously, I want the market to get to my profit taking instead of my stop loss. And I need to manage the risk in the speculative area. But if I do that, it's not to try, it's not, as I teach you, it's not to try to catch the bottom or catch to sell the top. It's more likely just to have interesting prices instead of breakout trades. But this means higher level of risk accordingly. All right? Anyway, that was just for as an explanation. Now let's get into intraday trades and apply the goddamn strategy. So what we're going to do, as we do every time when we do intraday trades, we're going to go daily chart first and assessing the context. Are we trading daily context? And if so, what are the odds for the prices to reverse or to range? How mature those range could be? So we're just trying to answer what is the daily context and answer that question. So we first we have a look at the Asian session just to make sure to see what the guys overseas have been doing. So in Shanghai, it's been all negative, all black, all red. So opening at the high, closing at the low, on support or near support areas, but with higher lows, lower highs. So there's definitely a perspective for this game to keep going for the day, for the next day. On the Nikkei, it's the opposite. Yesterday was crazy fucking bearish. Today is gapping up, opening at the lows, closing at the highs, but still having as well in here lower highs, but we already broke two lower lows as well. So it will be in here in decision at its maximum. So we have no information coming from the Nikkei. We know that the resistance in a daily context could be a little bit higher than that, but we're also trading on very strong resistances, so it could just fall like shit out of this trend channel. So no information coming from the Nikkei, pretty more bearish information from Shanghai. And if we do have a look at Hang Seng, in here the session is pretty bearish as well. We've been bearish gapping yesterday, and so far we're holding that gap. That doesn't mean it's not going to behave just like that, but I still tend to believe, you don't want to buy such thing. It really looks like a wave 4, wave 5, and I would definitely say wave 1 is at play in here, so kind of a range activity going for the days ahead, but definitely some bearish odds afterwards. From what I can see, we're still trading that divergence, and I would say that divergence is now activating, which is a little bit dangerous to trade to the bull side. And moreover, this is happening out of a strong historical horizontal resistance out of those prices. All right, so it was previous support is now acting as a resistance, what we call an overlap level, and this is not pretty. All right, which means what's happening in here is just that the bulls don't have strong confidence in the market. We may just pull back a bit, but normally I expect more bearishness to show up later. So we're trading resistances. Those resistances have early reacted last week, and we're now trading around those prices. So let's now see what it looks like if we have a look at our local market. So we'll start with the US as usual to have a broader perspective. So this is what the cash session has been looking like yesterday. Pure doji after that very brutal reactivation to the downside. The market is totally fucked up. So it's basically they tried, they heavily failed, and we're still trading below those levels. So we still have higher highs in here, so don't be too euphoric about the bearishness we had on Friday. The bearishness on Friday gave a very dangerous signal for the bulls, that doesn't mean they've lost already. It's just they took a hard hit, and now now it's our turn. It's the bear's turn. But we need to manage the risk, all right? Which means you never sell out of support areas. You most likely profit take on those support area, partial profit take, to manage the goddamn risks. So let's have a look at this. In a daily perspective, we're trading uninteresting areas, so it's just selling, okay? We're still in the selling context in here. So in a daily chart, we have absolutely no support, which means we can break through daily support without a goddamn problem. So we are easily going to forecast support breakdowns in an intraday basis than resistance breakups. All right, so we can put stop losses safely at resistances, and if we want to profit take, we're probably going to profit take after the supports have been broken down. All right, so that answers the first question. What are we going to do? Now we're going to have a look at the Deutsche index, the DAX, in a cash perspective as well, doing the same exercise. So what are we doing? We've been strongly reactivating out of a bearish daily context, and we barely touched it to fuck it up. We're in a bearish oscillation cycle in terms of cyclical perspective. The momentum is bearish, and we'll see how it goes, but normally we expect more bearishness out of this market as usual. In here in a daily chart, we're trading 50% trend channel. I suggest we work this area for a bit, but normally this is the support. That's going to act as an interesting area, so I would say we definitely have more bearishness to come in the DAX for the days ahead, but we can see that we're trading previous market tops. So it could be some kind of an overlap support that may just works for a bit. So in here we're trading support areas in the Deutsche index. So I would say Euro area is working the first support areas. So we'll have a look at Wall Street, which is intermediate. Wall Street is not even on support areas. They're still trading short-term supports, but the daily supports for them are weaker and lower than the current prices. All right, so the context is, just like we said, we're probably on support areas on the euro area, so we may expect some sideways action, some kinds of short-term ranges to build themselves, but those range will probably do no more than they're just triggering retracements. So if the prices are retracing, we're going to sell those retracements. If the prices are about to break down supports, you can take those breakdowns and safely protecting yourself out of the previous resistances. So now we know what we're going to do, so let's have a look at the intraday trades. We're just going to cover up the SPX as we're nearly ending the euro area session, so let's forecast what's going to come, not what's already been played. So let's go for the US indices. So I'm going to take SPX, obviously, but as usual, you can take the NASDAQ or the Dow Jones. It's up to you. All I would say is that if we have a look at this in a 1 hour chart perspective, we need to figure out where we are. So as you can see, the market is trying to build a support in here, triple top, let's say even quadruple top in here is a possibility. Like I said yesterday, I'm expecting this market to range for a bit, and that's exactly what's been done. So I would say we're sideways ranging flat, which means we've done A, B, C structure in here. And as you can see, this thing is definitely what matters to me. So I would say this is the trend channel out of 1 hour, so you know it's the 15-minute context. I would say definitely this is the area of interest in the US this afternoon, probably to figure out some breakdown of those support areas. So I would say trying to sell out of this. You can clearly see that the breakout area is in here in terms of volume. So we've got yes, that's why we need to zoom out. All right, so take 1 hour. The low volume area is 28.21. All right, so I would say 28.21 is the minimum level for a stop loss. So it means you put your stop loss on top of this. All right, this is where we had the previous resistance, so you can see it makes sense. So this is how, and this is where I think you need to protect yourself today. Put the stop loss out of those levels, trying to figure out to catch interesting prices to target new lows, and the support areas we've been highlighting already in our yesterday's plan, which suggests to me the support areas in the US section is more likely going to be there. So what seems to be the most probable for me today is the market to sideways action in here, probably trying some jitters at the open, but anyway, I think what's the most probable is another set of downside. Probably not today, or it could be today, but what we're going to trade today is searching for selling entries, but more likely assessing a range. I don't expect to have strong trending today, more likely, like we said, and 1 hour oscillation, figuring out this context. So I think it's a 15-minute signal to take today. In this context, searching for a 15-minute excess, probably at the open. As we are, remember that in here you need normally to wait for 61% retracement, and it's definitely where we said to put the stop loss. So I would say at least wait for the market to trade this area, and or you take a validated reversal, or you take a trade in this area in here. But I would suggest this stop loss isn't safe enough. So I would take my stop loss in here to be safe enough. Or even in an intraday perspective, I mean in a 15-minute perspective, I would say all we've got to do to be safe and sound is either you're going to be aggressive, which means you take the signal in this area and you put your stop loss in here at 28.33. Or even a little bit higher than that, on top of the 61% retracement, and you take a very aggressive trade, like a 50% retracement, no more than that, or 38% fib retracement, and you protect yourself out of the 50. That's the most aggressive thing, the one we said earlier, selling entries, tight stop loss, and if it doesn't work out, you let very less room for the market to work this area. So you're going to be very aggressive, which I still tend to believe not the actual thing to trade right now. More likely being cautious than being aggressive seems to be the case. The market is volatile, hesitating, lots of catalysts. I'll say this scenario is definitely the most rewarding, but also I think it's a little bit too risky to go down this road. So unless you've got a strong exit signal in here or something like that, I wouldn't play down that road. Because moreover, just have a look at sine wave. I mean, sine wave is even in a buying area. So I would suggest you just patiently wait for this market to break the 50 area. Okay, and I would say in a 15-minute context, I would suggest you trade the 61% area. So I would say waiting for this area in here, waiting for I don't even know how the market may work out this area. If it goes bearish, I'll trade bearish, which means I'll probably take a breakdown trade, targeting these areas if we do fail in here. But as you know, Asia is hesitating, Euro area is near support area, so why would Wall Street sell? The guys are greedy as fucking hell, so they want to buy. So logic would put us down, but maybe this is enough of a support. So I would suggest this is definitely a wave one. We've been fucking up the context. So this is the movement to follow. This is the major move, all right? So we're bearish, and I think we're bearish ranging. And in a bearish range, remember the rules. If we're bearish ranging, you don't sell at least if you're not at least 61% retracement. So that's the suggestion what I would do. Either we go lower and we're going to make a new low just to set to finish this movement out of 1, 2, 3, 4, 5 structures, making an excess in here in which you profit take partially, or this is already been done, we've been sideways and now we're retracing, and in that perspective wait for 61. Alright, just applying the strategy, we need to figure out the context, and I would say in here the context is definitely harder than ever to figure out. I would say this is the area in which you search for 15-minute signal, this is the area in which you buy, and as you can see prices are pretty much halfway through those levels. So I would say this area is dangerous. Either you put a large stop loss and you take a speculative trade in here trying to play the trend, or you just let it go. I mean, if you sold like me the previous top area, just let it go. There's no need to take additional entries in here. But those who want to absolutely intraday trade, I would say either you got strong signals in here suggesting you can trade that bearish context, or you just wait for the market to make an exhaustion move and get to load up with sellers in this area, because this area is going to be strong resistance area. Okay, we've been rejecting last week this area. Definitely a lot of sellers are waiting in here to jump in the boat, and that's definitely what I'd like to do. If we get in here and load up on sellers, can be damn sure that either the end of that week or next week is going to be crazy bearish. We've made a shit tons of sellers in here. You can expect pretty much even more sellers to jump in if we get in this area and to react bearish. All right, I'm going to leave you guys with that. Wish you a good day. So trade safe. I would say today in an intraday perspective, at least a 15-minute perspective, I see nothing to do. So either you're jumping into lower time frames, like a 3-minute signal, context to figure out if we have something to trade in here, and yeah, it very well looks like a range. So in a 3-minute perspective, this kind of context is a range, all right? So this range is like we tried, failed, all right? So rejected, oh shit, sorry. So it's range reaction, all right? We tried a trend, failed it, and price have been pushed back for strongly back to support areas. Resistance, rejecting, support, rejecting, resistance, rejecting. So I would say next option in here is either that market is breaking one more time, which is possible, all right, because for now we can see that those structures are to the upside or most likely flat, or we just wait for another move in here to trigger another support. But this range is mature, so I would suggest you just don't trade this range. Either it's going to trigger a bullish trend that's probably going to lead us to the resistant context, or this thing will just still remain in here, fail, and we're probably going to get straight to the blue area. This range is mature. You don't trade it anymore. All right, so anyway, I would say 3-minute chart doesn't give us opportunities to trade at a low risk perspective. 1-hour chart gives us opportunity, but 15-minute, sorry, gives us opportunities, but not in the current context. All right. So the most aggressive bearish trades is at least 28.31, following the strategy's rules, and the most interesting buying area to risk manage for the bears or to enter for the bulls, because once again, I don't give you what the market is going to do. I just tell you what I will pick. I do have a choice to make. It's a binary choice. Either I buy or either I sell, but I don't do both. So I chose to sell. So I'm favoring the selling scenarios out of buying ones, but that doesn't mean I have the right answer. All I can tell is that those who have a bullish bias in this market, a bullish perspective, this is where you trade. You're going to buy in here and manage your risk under the previous supports. All right, that's it for today. So I hope you have learned quite interesting thing. Watch out for AUDNZD for the night to come, and I'm also going to tell you this. So Cisco is probably going to enter my portfolio in the forthcoming days. The reason is this: we're trading bearish engulfing structure eventually, so I'm not going to take that trade until Friday because I want this to be validated. I want to see a bearish engulfing structure on the weekly charts, even better if this is an evening star pattern with bullish hesitating doji, and then bam, if we do have a negative week to come on Cisco, I'll definitely jump in. It's exactly, to me, the same scenario as the Microsofts and the Visas. If those guys are reversing in here, which means they're losing gas in a bubble, if the bubble doesn't have enough gas in the tank, it's just going to just fail itself and reverse brutally. So all those trades, the Microsoft, Cisco, and Visa, I'm going to take them on Friday Eve, right before the market close, if they do confirm a strong weekly bearish reversal. I'm not going to put billions in those trades. It's just tiny trades with a stop loss at the previous highs, just to try figuring out if the market is losing strength in here. If it does, it's just going to collapse in a straight line. If it doesn't, it's just going to take down my stop loss in a couple weeks. It's purely and simply speculation, so high level of risk, but the reward is definitely worth the shot in those assets, because if you catch the top, you'll be able to reinforce the crash pure and simply and safely along the way. All right, see you guys tomorrow to see how it's been for the AUDNZD.